This is
No.
accumulation for like long-term fundamental strategic type reasons.
Right. And one other thing, you made a comment at the beginning and you talked about the outflows out of ETFs. And I want people to think for a moment that one possible explanation is that the ETF metal is being tapped as a source of ready available supply. What I mean by that is that when physical demand rises and large quantities stand for delivery, like we've been seeing on COMEX, authorized participants have the ability, and those would be those that fund the baskets like Goldman and JP and Citi and B of A. They
Right.
can redeem ETF shares very quietly. And they take possession of the underlying metal and they use it to satisfy delivery obligations or replenish inventories or move it to COMEX warehouses or
Right.
ship it to buyers elsewhere in the world. In that sense, ETFs can become a source of physical supply during periods of tightness. And so when we talk about ETF draining, it isn't always as it seems. In other words, yeah, shares were sold off. Well, what if it's Goldman Sachs saying, we want the physical, let's not make the big footprint that we otherwise would on COMEX. Let's just redeem 10,000 shares and stamp for delivery. Okay. And they do that all the time.
Okay. So the fundamentals are a lot stronger than just following prices might lead one to believe.
Which is the greatest tool of misdirection. I couldn't have said it better myself. That is correct.
Buy the dip is the upshot here.
Well, and when we talk about the dip for a moment, Dan, you know, the BIS, the most powerful bank in the world, Bank of International Settlements.
Right.
They came out and they almost took the CME group, the COMEX, to the woodshed. I believe most people wouldn't read it that way. I did. And they came out in, I don't know, a month ago, and they said, look, the reason the price fell was because of the actions that the CME took in a stupid way. What do I mean by that? So if we look at silver as a prime example, silver was rising every single week into the end of the year, from December to January, up. And as that was happening, they kept raising margins, but not massively, but they kept raising them. And then we get to January. January is notorious for rebalancing of ETFs. And when you have levered ETFs that have gone way out of whack in terms of the percentage gain of the underlying asset, and their prospectus says, hey, come January, all of this needs to be rebalanced. So what happens is that you are guaranteed crazy volatility the first and second week of January. It's notorious for this, as all of that excess has to be sold off to rebalance the ETFs. So what they basically said was, look, into the first and second week of January, as all of these ETFs were being rebalanced, guaranteeing selling, you had the CME group raise margin requirements by 300% at the worst possible time. The worst time, because they were doing it right as things were being rebalanced. Now, to give you an idea what I mean by margin, just to kind of so you understand, your listeners understand,
Right.
we would typically have 2 million ounces of silver in our warehouse. And in order to protect our inventory from price fluctuations, we will sell the exact same amount on COMEX, all the way down to 1 ounce. And so if we have 2 million in inventory, we sell 2 million on COMEX. The price falls by $10 on silver times 2 million ounces. I'm down $20 million in my inventory. But what I sold short on COMEX went up the exact same amount. I'm market neutral. It would cost me typically in December, December 1st, it cost me $15,000 in my margin account. Let's just say this bottle of water is $15,000 cash. Just sits in there. Now I can control one 5,000 ounce contract. Or if I'm a speculator, I want to buy a contract, put $15,000 in your margin account, you're good to go. By January 1st or thereabouts, they had raised it to $54,000. And if you didn't post that extra money, your contract is liquidated. And so they raised margins by 300%. So you have we would have to have $50 million sitting in our margin account just to hedge our position. That doesn't even talk about gold or platinum. And so the margin rates went up so much along with the rebalancing where selling begets selling begets selling, and the margin calls and selling and more selling, and the price collapsed. And they said, you know what? This price collapse was structural, not fundamental. In other words, it was synthetic and orchestrated largely through ETF rebalancing and massive margin increases at probably the most stupid time.
Right, but Andy, don't in a massive bull run like that, they have to increase margin by some amount, don't they?
Of course they do, but they changed it to a percentage of a rising number, and they just guaranteed that the margin, the onus of large margin requirements would create a sell-off. And yes, they can raise the margins a little bit, but to raise it by 300% in a month guarantees a collapse. You're guaranteeing it, and so I don't think they needed to be that aggressive. I guess I'll put it to you that way. And they would have been better to wait a little bit or to do it slower, knowing that the first 2 weeks of January, you're guaranteeing that silver is going to have a massive collapse as the rebalancing of the ETFs into the 300% increase in margins. You're guaranteeing the worst possible atmosphere for any speculator or any hedger. And then what had happened is they blew up the entire refining industry. Because if you're a refiner, I mean, I'm talking across the entire United States, where if you're a refiner and you brought in $50 million worth of silver in various forms, from doré to candlesticks to junk silver, you got to break it all down. You turn it into shot, and then you melt it into bars and rounds. That could take 6 weeks, 8 weeks. Well, the price of silver, so they have to short what they pay for. They got 50 million in inventory that takes weeks. They short on COMEX, so they're market neutral. Well, the price kept going up and up and up and up and up and up and up so fast that their short position was getting clobbered. They kept getting margin called. And then they increased margin requirements by 300%. And all the refiners said, I'm out, we're done, can't take any more business. And they're still back ordered from the beginning of the year because of that distortion. But yes, to your point, it should be a little bit. This was far more than a little.
Proportional. It should be proportional.
Yes.
Constantly.
Yes, and this was far more than that. So it created an environment, a synthetic environment, where we were guaranteed to see a price fall.
Right. In other words, silver didn't go up 300%.
But isn't it interesting that in that environment, the month of February, January, February, March, China imported more silver than at any time in the history of the country, ever. And they're the second largest producing silver country in the world. The price got kneecapped, and they buying it hand over fist. Price gets kneecapped, and people are standing for delivery here, hand over fist. Do you think there's some correlation there between the people who know where the puck is going and those who are just watching where the puck is?
Right. So just stepping back 30,000 feet, the fundamentals have not changed at all then. If BIS is, and you guys are right, then this was kind of a technical, as you said, synthetic, artificial, whatever, price collapse, engineered price collapse. And the people who buy based on long-term fundamentals for, strategic reasons, they're not letting up on the gas pedal at all.
No, I mean, you still have the day-to-day volatility, sure, but the real problems haven't gone away.
The price is what it is, right? Yeah.
Right. You got debt exploding, deficits are still massive, interest costs are rising, currencies are being debased, geopolitical risks still escalating. And more importantly than all of that is that trust in the financial system has and is still eroding. And so I think these are the reasons why you're seeing the central banks and their purchasing being inelastic. They don't care about the CPI number. They don't care about anything. All they care about is that they continue to buy gold, and not only buy it, but to repatriate it. Repatriate it from the Bank of England, like India has brought back almost all of their gold from the Bank of England, and others from the New York Fed, like France, like Germany, like Poland, the Czech National Bank, the Dutch National Bank, the Bank of Austria, Hungary, Turkey. They're all bringing their gold back because of lack of trust. And that's what all of this boils down to, I think, is a system that is based on trust has witnessed a massive erosion of said trust. And that's why the central banks, look, they realize that there's been more debt accumulation in all of these countries than really can be serviced in this environment. And that's why they're buying gold. They're not buying gold for any other reason, but that they see where the big picture is. And it's been nonstop, really, for going on 9 years, the central bank's quietly doing this. And I would argue it's actually accelerating underneath the surface.
And you're right. We used to hear about it a lot more, I feel like. We heard about the central bank buying more, and now that it sounds like it's shifted into another gear practically, we don't hear about it at all.
Well, I think there are reasons for that. I mean, misdirection is very pervasive, and I think misdirection is taught in every major business school. On it's like the book The Art of War. They read it in major business schools on corporate hierarchy, in law schools on formulating arguments. It's mandatory reading at West Point and at CIA, and most major Japanese businessmen read it prior to starting their career. It's about misdirecting through price, through rhetoric, how to beat your punch or your opponent without throwing a punch. And I think it is very much misdirection. When you
Who's doing the misdirecting?
Well, it's what it is. When you see this kind of metal standing for delivery on COMEX, someone thinks it's important enough to spend hundreds of billions of dollars the last 19 months, and no one says a word about it. Nobody. And that's the part that just drives me nuts. The mainstream media is supposed to be so adept at telling us what's happening, and they miss the biggest story completely. They look at price, they look at technicals, they look at all the nonsense, and someone should just say, but I got one question. Who the hell is standing for delivery for billions every month without missing a month since a year ago, November?
But Andy, like you're the Miles Franklin guy. You're the guy. Like, shouldn't you be able to call up the Financial Times and say, "Look, you need to pay attention"?
Well, I try. I've been invited on some pretty big shows recently, and it's getting closer to the mainstream. And I try, but they don't let. Part of the reason that I wouldn't get as much credibility maybe as if you were doing it is because I own a precious metals company, and people seem to think that doing the right thing and running a business have to be mutually exclusive of one another. I put my name out there, my face, my real name. I'm out there more than anybody. There's thousands of videos, and I say it like it is, what I believe, and I say it honestly and respectfully, but I still own a precious metals company. So much of what I say by some people is dismissed. I wish it weren't the case, because I believe in my soul.
I mean, I
spend a lot of time researching.
Yeah, I sort of get that. Okay, it makes a basic sense, but on the other hand, you're also the guy who, with all the knowledge. I mean,
we live in a cynical world, Dan. People are very cynical, and they can't accept that as being reality.
Yeah.
You can. I mean, I've known you for a long time, and we're in similar circles in this industry, and in the circles that we rotate in. You screw up, you're done. I mean, it's word of mouth and reputation and integrity are everything in business and in this industry, which is a small industry. And my company's never had a customer complaint ever in 36 years. Doesn't mean I don't screw up or we don't screw up, but we make it right. And in terms of my motivation for doing this, I sometimes I ask myself, why do I do it? And this is going to sound really stupid, and I don't mean it to be, but I almost feel like I'm supposed to be doing it. Now, I know that sounds conceited. I don't mean it to be. I try to internalize, why do I do this? And it's something that I get up every morning excited to dig into the news and to figure out what's going on and to tell people and to be honest and sincere about it. I own a gold company, so some of it is just, I think, dismissed. But for whatever it's worth, I have theses and theories that I've been saying out loud recently that no one's talking about. I believe President Trump is trying to bring back manufacturing, and I've laid out a detailed scenario on how I believe he's going to do it. And in 2019, I'm screaming about the BRICS, and I'm the only one saying this stuff publicly. And in 2019, I'm screaming about the BRICS. Everyone says you're out of your mind, Andy. And lo and behold,
countries. BRICS countries. Yeah.
And now everyone understands it. But the point of it is that I think that speaking with conviction, using facts behind it and integrity, that's something that means a lot to me.
All right. Yeah.
And I don't think we've seen anything yet as it pertains to gold. The whole new story is being written on gold. It is being rewoven into a monetary system, Dan. It's being rewoven right in front of us. And, I think that this is just chapter one.